Hello everyone, hope you can hear me loud and clear. I've got the pound CAD just to thanks Nick. Yeah, just on your point on the timings. For those of you not in the UK, our clocks went back at the weekend, which means that the US session here starts at 1:30, not 2:30. I'm now talking about the cash markets. So the cash markets for us open at 1:30 UK time and not 2:30 as normal. And everything moves forward an hour, but I think the US markets, I'm not sure whether they follow a week later or it's next weekend. And then obviously we get the same reverse in March. So it's just make sure you're aware of when particularly the cash markets open, because they do open an hour earlier. I've just got the pound CAD up, and really just to follow on from where Anna was, this is the CSI on 5 minute. You can see the pound starting to kick down a little bit, but we've now got the pound and the Canadian moving in lockstep. They're moving in the same direction. So it's not going to be the strongest trade. What we're always looking for is that those opposing forces, we want to see strong selling or strong buying, counterbalanced by strong buying or strong selling. That's what we're always looking for. But the reason I just wanted to highlight this was to pull this up for a moment, because we spend a lot of time on the faster charts for various reasons, not least because we pick up all the lessons. It's easier to show you things on those faster timeframes than on the slower timeframes, but that's not to say the slower timeframes aren't important. They are. And I just wanted to highlight this because this is a classic example of several things, really. First of all, looking at the daily chart for context of what may or may not occur within the following day, not only in terms of levels, but equally important in terms of the volume that went in. The candle I want to show you is this one here. This was the other day on pound CAD. And if you look at the volume associated with this, it's very low. So there is a lack of participation there. Now, you do have to remember that we get holidays, so there will be holidays coming through. All of this, particularly seasonal. There's seasonal aspects to it as well. But I just wanted to highlight it because you do have to bear in mind the whole time that VPA applies not just to the faster time frames, it also applies equally to the slower time frames. So just bear in mind, look at the dailies and also look at the levels that just pop that up again, the levels that a market gets to. This particular pair, was struggling clearly at this level. There's no particularly strong price-based resistance. These are the price-based resistance level on the accumulation distribution indicator. These are stronger levels where the lines are thicker, probably easy to see over here. You've got a little cluster there. So these levels are stronger. These levels are weaker where they're thinner, because what the indicator does is it presents this information visually. It actually thickens the line according to the number of times an area is tested or retested and holds. So you get this great visual picture of the price-based support and resistance levels up and down the chart. On this occasion, there's very little in the way of price-based resistance, but we have got this huge amount of volume that's sitting here, and it's tending to cap off these rallies that are occurring for this particular pair all the time. Getting to these levels, we got to this level again, and you're always looking at the closing level on the previous day. Have we breached it? How does it relate to what's happening intraday on the current trading session? So I just wanted to highlight that. Just going to go over onto the majors, because we've seen a lot of dollar buying this morning. Hop over onto the majors matrix, which is this one. And the nice thing with the majors matrix in terms of the dollar, you are looking at it literally through that prism. So I've got both this one and I've also got the futures as well, which is probably even better. But essentially what you see on your majors matrix, in other words, you've got the 6 principles. I haven't got the dollar yen on this particular one, but these are the 6 in inverted commas majors, if you will. So what you're looking at is essentially, is that dollar buying or dollar selling universal across the complex? And you can see here, this is cable on 5 minute. This is where we've come into the London Open at 8 o'clock. So we're now looking at the volume in here being related to one another on the 5 minute time frame. If we move back over to the 7 o'clock. This is the European session getting underway. So we had this nice move. And what you see also prior to that, this was in the Far East Asia session coming into Europe. We were trading very much around the volume point of control. And that is where you expect to see congestion. And just as an aside, which Anna didn't mention, we've been writing a lot about the US markets, US indices, looking very fragile. The post is up there on Anna's side, I think it was last week sometime. And what we were looking at was, where is this market going to head to? You know, where are these stopping off points on the daily time frames for US markets? And it's very clear, because each of them has got the volume point of control is sitting well below, and it is the logical stopping point for that next particular move. And the volume point of control is so important because, for many different reasons, not least because it signifies markets in congestion. It signifies points at which markets are likely to move to if they're above or below. It also gives you all this information about the volume. You can see here, this is on the 5 minute. The volume here is very lightweight. You know, this is a low volume region. So as the market starts to break away, and there was a terrific trap move ahead here, this is where the market spiked, deliberate trap move into a volatility trigger. What are you expecting? You're either expecting congestion or you're expecting a full-blown reversal, and we got the reversal off it here and into the downwards trend. Then as you start to break away from the volume point of control, which is defined not only by the VPOC itself here, but you also tend to get associated with it these wonderful levels on the accumulation distribution indicator. The two almost, wouldn't say they go hand in hand, but there is a very close relationship where, obviously, when a market is in congestion, you're getting areas that are hit all the time, tested and retested. And what you often see with the volume point of control, and I think I've got one on the dollar yen on the futures from memory, is you will tend to get these channels building of, we haven't in this case got the floor of support building, but we've certainly got the ceiling of resistance building. And that's what you tend to see. And it gives you a great indication of where to place your stop loss. You've got this wonderful protective barrier up here in terms of a potential pullback if it's pulling back against you. And then off we go into the trend. We get a volatility trigger. That one passes straight through. We get no pause point, straight on down to the next level. As I say, we have this low volume node here on the volume point of control. Then we start to move into a heavier region of volume-based support, where the market potentially could find some help to stop it falling. But this is a little classic example of a reversal into a primary trend. In other words, this is now a secondary trend. It is not a primary reversal. Why is it not a primary reversal? Because the volume was falling. We had the weakness come in here, effort to rally, weak, lots of volume, effort to rally, weak, not going anywhere, effort to rally, volume falling. What is that telling you? It's telling you that this is a market that is going to continue in the downwards trend. We continue lower, we get some more weakness coming in here, we get a big volume spike here. Now this potentially could be buying, so it's a cautionary note, if you will, but it's actually followed immediately by a volatility trigger to the downside. We haven't moved inside that, looks as though we're carrying on. More weakness on this particular candle, lots of volume being driven in there. We're now moving down into a low volume region at the bottom of the chart on the 5 minute time frame for cable. And throughout all of that, you've got the trend monitor, your friendly trend monitor here at the bottom, which is just helping to keep you in. And of course, this is just one time frame, but you'd have this up in multiple time frames. If you're on the 5 minute, you probably have the, I don't know, the 1, 2, 3 or 2, 3, 5, something like that, or 1, 3, 5. If you're on Ninja, if you're on MT5, you'd have the variables there. Little more tricky on the MT4 because you don't have such an array of time frames. But essentially, you would be looking at this in multiple timeframes now. So as far as cable's concerned, we've obviously got this nice trend continuing. And the question then is, well, is it selling of the pound, or is it being more driven by buying of the dollar? And at the moment, it's pretty much equal. I go over onto the CSI's multiples, where we can look at it a little bit easier. There we go. We've had the, let's pull this one out, there we go. We've had this very strong buying of the dollar. We've had a little bit of dip, we got up into overbought, but it looks as though it's carrying on for the time being. You know, it's not yet ready to fall. That's on the 5 minute. Just push that back over there. The pound tried to rally. You know, we had this little kick up, but you know, the market is now selling the pound again. It's selling the pound. It's continuing to sell the pound on 10. Over here, we're seeing continuous buying of the dollar here on 10, and we're also seeing that reflected over here on 15. Now, at some point in this time window, this time slice of intraday trading, all of this is going to reverse, and it's going to reverse quite strongly because currency pairs do not stay overbought and oversold forever. They have to move. This is a market of mean reversion. And it is almost a perfect example of mean reversion. And by that, I mean that a currency will get to an overbought position. It may stay here for minutes, it may stay here for hours, but at some point it will start to reverse. That is what currencies do. They do not stay overbought and oversold forever. They have to move. It is a constant 24-hour cycle. It's all about wheels within wheels. We explained it in the program. And it's difficult at times to get your head around it because what you are doing as an intraday trader on a very fast time frame within a tiny little wheel section of one of these cycles where we're moving from overbought to oversold, someone else will be at a much slower time horizon, have no interest in what you're doing or what that tiny little microcosm of a cycle is doing. They will be looking at a much slower, much bigger picture. And that's what you're having to do the whole time, is to tease apart exactly what you're trying to do, focus on that particular time slice. The analogy I've used many times before is of a blinkered horse. We love flat racing. And when a horse is blinkered, it's blinkered for one reason. It's because it gets distracted and it has to focus on the finishing line. It stops it looking at all the horses that are running alongside, and its sole focus is on getting over that winning line ahead of everybody else. And really, it's the same principle here. It's to try and blinker yourself from what is going on much slower time frames, because what you will do is you will, if you enter a trade on a fast time frame and it doesn't quite go in your direction, then you will migrate down to the slower time frames. You're looking for confirmation bias. We all do it, we all have it. Doesn't matter what you're doing, if you're buying something, if you're buying a car or whatever, you will look for confirmation bias that other people have bought the same color car or the same type of car, and you say, oh, fine, okay, well, I'm with the crowd there. You know, that's what confirmation bias is. You're constantly looking for it. So if you're in a position on a fast time frame and you're not finding that it's working in your favor, you will migrate out to the slower time frames, I can assure you. So what we're seeing right now is it's still carrying on over into 15, which is great. So we've still got more dollar buying going. The trade is still developing. Pound is flattening off a little bit on the 1 minute there, you can see. Let's just head over to, let's go to the currency majors. Right, on the majors, sorry, not on the majors, I wanted to go to the futures. Sorry, that trade's still going nicely, and we'll see it on the futures as well. Here we go, this is on the futures. This is the 6A, so this is the Aussie dollar. 6B, this is cable. Sorry, I've got that on daily, beg pardon. Let's just change that to 5 minute. We've got more on the time frame. There we go. Just reload that. There we go. Okay, so we're now on the same time frame, so it's all on 5 minute. So this is 6B, this is cable, this is Aussie dollar we've got here. Over on the right-hand side here, we've got CAD dollar, because it's quoted, everything in futures world is quoted against the dollar. So this is the dollar CAD inverted, if you will. Then we're down on the bottom line, which is euro dollar. Then we're down into dollar yen, but that's actually yen dollar. So the dollar is the counter currency again, and finally down onto the New Zealand dollar. And what that's really telling you is telling you several things. First of all, that the dollar buying, other than in the yen dollar here, is universal pretty much, but it also tells you that the strongest pairs, certainly at the moment in terms of trend, forget about yen dollar, come back to that in a minute, I mentioned earlier on. The New Zealand dollar here is really not trending very strongly. You can see it there. It's pretty weak, in fact. You know, it's very spotty, this price action. It's not smooth, it's not moving in a nice smooth flow. But the others are, all of the others are. We've got the euro dollar here. There we go. Really nice move lower. Same on Aussie dollar, but even Aussie dollar is not moving particularly strongly. So again, it's a question of teasing out. Now, what may well happen, as Anna mentioned, is the whole business of rotation. What you will find is when the market is buying or selling a particular currency, it will then start to migrate out of that particular currency pair and into another associated currency pair. And you'll see that on the majors, obviously. What this also reveals is you've got the trend monitor here. Now, you're obviously looking at trend monitor. You're not looking at the trend monitor in terms of the currency pair itself. You're actually looking at it in terms of related currency pairs. So again, it's using it in a slightly different way, more nuanced, if you will, but it's bright red, it's bright red, it's bright red. We had this little pause point here where we went into a darker blue, possibly, at the volume point of control at that particular point on the move. The market was maybe coming into a little bit of weakness, potentially reversing, came out the other side back into bright red. Not a flicker of change down here on euro dollar. Dollar yen's very different. Dollar yen is a currency pair that moves in its own orbit, if you will. You can think of it as it's an outrider almost of the majors. Sorry, say again? It's an outelier. In other words, it does not necessarily follow the same pattern as all the other majors, and it is indeed very different. We explained it in great detail in the Forex program as to why this is the case. And it's a very difficult pair to trade. You have to understand the characteristics of the pair before you can start trading, because I assure you it will not follow the typical patterns that yen pairs will follow or dollar pairs will follow. But it also highlights, this is what I was wanting to show you, on the when a currency pair gets to the volume point of control here, which is the fulcrum of the market, what you also then often get associated with that is these very well-defined levels, the channels above and below, which give you great points of reference for if you are a breakaway trader looking for a trade from a congestion zone, which is a fantastic tactical approach to market. What the two indicators together, they work almost in tandem, is that you'll get the volume point of control, but then you will get these ceiling of resistance and the floor of support building and rebuilding all the time, and give you very strong protection areas and also breakaway levels to gauge when you think the market is breaking away from those particular regions. I cannot stress it too strongly. You've got a great example. You've got the cluster of two here of the levels and one above. So it's extremely strong, and it's just a great way of trading when you're using the two indicators in combination and looking for those breakaway opportunities. Let's just go back to where we were on the currency pairs multiples. This was on pound CAD. And what are we seeing on pound CAD right now? Not a lot. And the reason we're not seeing a lot is purely because we've now got lots of CAD selling, but the pound is also selling, although it's flattening off a little bit. And this is the whole raison d'etre of the currency strength indicator, because not only will it tell you, yes, the Canadian is selling very strongly, which is great. We've got some pretty strong buying of the yen here. Let's see what's going on in terms of Globex. Sorry, just want to see what the sentiment's like. Let's have a look. This is what I was referring to. Sorry, changing tack again. These are the daily timeframes, and what we wrote about last week, and indeed the week before, we said the whole market was now looking extremely fragile in terms of risk sentiment. And last week we said that the level that this market was moving to was pretty clearly defined for you. You've got the volume point of control here on the YM. It's already reached that point. In terms of the NQ, this is where it's going to. So there's another 200 or 300 points going down towards that level. And the same is also true of the ES. That's got another 30, 40 points to get down to volume point of control. Now, at that point, when they get to those levels, expect to see congestion. We're already seeing it here because the YM's sitting there, but the NQ's got some way to go, as indeed has the ES. So that's what's happening this morning. It's all pretty flaky. We had this big sell-off yesterday. The market's not looking terribly strong. Go back to where we were. Lost my thread now. What are we talking about? Oh yeah, the CSI. It's just a great indicator of what is going on in terms of sentiment, what is going on in terms of the currency pairs, in terms of strength. If you've got steeply sloping lines or steeply rising lines, that is telling you about the strength of the trend in that particular currency. Then you've got to go and find where that strength is the greatest. What are the best opportunities? For example, you've now got the yen rising with the New Zealand and also the Aussie. So there's going to be no trades in there at the moment, certainly on the fast time frames, because they're all moving in the same direction. So they're going to be doing this. They're going to be moving sideways, which is what you're seeing on pound CAD at the moment. You know, that's what it's all about. It's about teasing out the trades. And if you go over onto the currency array, which I've got up here, let's click on that, on multiples. You know, this is what is going on right now at the moment. This is on 3, this is on 5, this is on 10, this is on 15. This is a visual. This is a visual, if you like, of the CSI, but from a currency pair perspective. It is telling you where the strongest trends are at the moment. You can see down here we've got the pound CAD, and if I isolate out on the pound, that'll just give us an idea of, you know, is that pound selling or buying universal? And pretty much it is. It's not particularly strong against the euro right now. If it was strong against the euro, then the euro pound would be right up at the top, but it isn't. And also the pound Swiss is down here. So obviously there's something happening with regards to the Swiss franc and also with regard to the euro, which is tending to hold down that particular strength of selling that is being reflected down here in these guys. And the same similar sort of picture over here. And what you're looking for all the time, just isolate out here, just isolate out here. Now, obviously what you'll see on the faster time frame down here is once this starts to slow, then these will start to lift off the bottom and they will start to move up the ranking ladder. And you'll start to see that momentum, if you like, that move. If it is a strong move, a strong change in trend, in other words, it will begin to migrate across to the slower time frames rather, out towards your slower time frame here, and ultimately out towards this level here. But the nice thing about this particular indicator is you see all this visually. And if this is going to change, you'll see all of these sweep up to the top, and obviously you'll see the euro pound going the other way. So it's a complete visual representation of strength and weakness in the currency pairs. You can think of it when you use it with the currency matrix. You can this is looking at it. This is like the trend monitor and the trend dots. If you're using the trend monitor and the trend dots, the two of them are very complementary because the trend dots is very close to the price action and will tend to react much quicker, whereas the trend monitor takes the more considered view of changes in trend. And these two indicators are very similar in that respect, in that the currency array will take a slower perspective look at the changes in trend, but will give you this visual representation, whilst the currency matrix will work very close to the price action and give you almost instant changes in sentiment, which will then migrate through onto the currency array because it's looking at it on a slower time perspective. And of course, what you also get with the array is you get the second ranking column down here, which is giving you a heads up on when, for example, down here on the 10-minute, you know, we're now getting a signal that potentially the pound CAD is now approaching an oversold state. If it gets to oversold, this will change to bright red and the brackets will disappear. Equally up at the top, then overbought will be on bright blue or on the darker blue with the brackets around. Yep, I'm just going to pause there. Okay, just going to pause there, move back to Anna.
I've just got the workspace for the pound Canadian, and because it's actually got, I'm talking about setups and what I was going to say about them, but this is also a really nice example of an example of when you as a trader, and it's something, again, as David has mentioned, we do explain in more detail in our program. When you begin as a trader, you soon appreciate that you kind of have to decide what type of trader you want to be. In other words, what are the signals, what are the trading setups, what is the chart pattern that you like to trade? What is it that you feel more comfortable with? Do you, forget things that you hear about, the trend is your friend, look for a trend, look for this, look that. Because markets don't spend an awful, they spend more time in congestion. By that I mean just going sideways, drifting, and deciding which direction they're going to go. So when you are faced with your chart, you have, I suppose we've kind of broken it down into two broad approaches. The one approach is you decide, or you test out, you trial through trial and error, you look at what we call tactics, and you'll have heard us, and David uses your trading tactics. But what do we actually mean by that? And by that we mean is, once you have established what the geometry, what the shape, what the structure of the chart is, what type of price action you are looking at in real time, what is it that you're facing? What kind of weather, let's take a sailing analogy. What kind of weather condition are you facing? And a sailing analogy is actually a really good analogy, because even if you've never sailed and you've never gone out on a little boat, common sense tells you that if you're going to take a sailing boat out onto a lake or onto the sea, the first thing you have to look at is, what kind of weather have I got at the moment? Am I going out into onto very calm water? Is this boat actually going to am I going to move this boat using, say, wind power? Is it going to take me from A to B? Or am I looking at a very wild conditions? There's a lot of wind blowing, etc., etc. And the market is no different. The weather analogy and the sailing analogies are really good analogies. And so that's the first thing you have to decide. And therefore, the question is, as a trader, you can either say, actually, I'm actually going to focus on one or two tactics, one or two chart patterns, one or two setups that I like to see on a chart, and I'm really going to, get to understand them. They're not always going to work out, because nothing in this market is certain, but I'm really going to practice these, as I said, this skill. I'm going to hone my skill in this particular way, and then I'm going to wait. I'm going to be patient, and I'm going to, watch for the setup. And just to give you an example of that, a really nice example here. In fact, it was yesterday, as I said, with the indices, they were selling off sharply, and then, the buying did come in, and it came in on, they all came in on what we call two-bar reversals, engulfing candles. And if you overlay one or the other and you look on another time frame, it's a hammer candle. And and the buying came in, and you've got to be pretty brave as well to take the signal, because it doesn't always work out. As people, this confirmation bias, we say, oh great, that worked out there, and I look at the next chart, and here we are, oh great, and it worked out there, and lots of volume underneath there. And we look at the third index and we think, oh great, that worked out there. But if you take a step back and look back over chart, and this is not back testing, this is purely observational, there will be occasions when it doesn't work out. But again, if you look at there's a support and resistance, you look at multiple time frames, two-bar reversals, you think, right, I'm really going to specialize in two-bar reversals. That is my preferred thing. So I have to wait. Now, looking at what's going on in the on the 15-minute chart here of pound Canadian, you can, there's no way at the moment this is anywhere near setting up to be that kind of setup for it. So therefore, the other broad approach is, you say, well, actually, I know what the chart is looking like. I understand the structure of the chart. I can see the pattern of the chart. I can see the geometry of the chart. And what we're actually looking at is, we're looking at a congestion phase with possibly a breakout, if you like, a reversal from we're looking at an accumulation phase after a move lower. you let the chart dictate the tactics for you. It does mean you have to learn more about, you have to be comfortable with analyzing the chart, analyzing what you're looking at in terms, as I said, in terms of structure. I call it geometry because to me it's a very geometrical shape, and the Renko is the one that would certainly help you to, to put it into context, and it does the work for you, as it like, because it takes away, if you look at that and you compare it to what you see on the 15-minute chart, you don't, we can see there's been volatility triggered, we can see the wicks to the candle, all very important in terms of candle patterns and chart reading, but it simply takes that away. And let's have a look what's happening on the minute chart. Again, you can see this is the choppiness that this is a congestion phase, but it's not a, it's quite a wide one. There's no firm direction yet in this move for this particular pair. I'm not even looking at the CSI at the moment. The CSI will also help you make the decision as to whether this is actually going to break away from this congestion phase. And if we look at I'm just sticking to the timeframes that are available on MT4, we can see here we have, call that a volatile congestion phase. It's volatile because the candles have got wicks to the tops and the bottom. If we look at other congestion phases here, narrower spread candles, smaller wicks, but then you look at the time that phase of price action was trading in. It's it's 5:30, it's 3:30, it's the middle of the Asia Pacific session. Pound CAD is not a pair that is heavily traded in that session. And going back to the Renko, so if you like a breakaway, it's also a reversal in a slower time frame. So breakaway trades in one time frame that we're seeing here. This is on using a 3 pip value for the Renko, and on a faster. Sorry. Yes, and so as a trader, there's two broad categories. You either hone your skills on certain patterns, on certain setups, on certain configurations that you like to trade, and our indicators will then support that, the VPA will support that, and you simply have to wait. You put yourself together, you put a little portfolio of pairs that you like to trade, wait for the moment, and waiting for the right conditions for you to exercise your setup. Or you say, no, I'm looking at a chart, I know what I'm looking at, I'm either in a congestion, I'm in a trend, I'm this, it's whatever, and you trade what you see on the chart. Right, that's what I wanted to say on that. I'm going to flip back over to David, because I think, is it the dollars on the way?
Welcome back. Hopefully you can see my screen. Nice little reversal going on. I've switched over onto euro dollar because we've got nice selling of the dollar here, and we've got nice buying of the euro, which you can see down here on, well, across the time frames. This is on 15-second. Trend monitors transition here. You can see into blue. We're into blue here, starting to migrate into a darker color here. No change here yet. You wouldn't expect to see it. But if I flip open the 10 minutes, just gives you a heads up on what we're looking at right now. We had the move lower, we had volatility, then we had some buying coming in here. This is 8 o'clock, so this is London session open. Now we're starting to see a move higher, pushing through these levels of resistance on the accumulation distribution indicator. And the question you've got to ask yourself is, how far is this rally like to go? What's it going to deliver for me? And you've got the volume point of control up here at 22. So in terms of extent of a possible rally, you're really only looking at maybe 10 or 11 pips from now on. In addition to that, you've got pretty heavy congestion in here. You've got a very small area in here of light volume on the volume point of control. So is this rally going to deliver something meaningful for me? And the answer is, given looking at that chart, probably not for the time being. Yes, there is enough to take a scalping trade, but if you're going to sit in this for anything longer than a few minutes, then you're probably going to be sorely disappointed, because the same is true on the 5-minute here. We've got the volume points of control. We've got these two levels here. This is what I meant about this channeling between the volume point of control and the accumulation distribution indicator, you know, they work in tandem in this way. So you get these very strong levels defined for you. You can see it over here, the channel. You know, it really didn't take much effort to work out where you might put a stop loss if it breaks the upside, where you might put a stop loss if it moves the downside. These levels are constantly being rebuilt the whole time. That's why we develop them. It's as simple as that. You can see the trend monitor here. We haven't had a transition on 5 minute. It's still remaining red for the time being. So if you're in a slower time frame, you know, this doesn't look particularly strong for the time being. You can see it's starting to roll over here on 15 second. You go right the way up to 15 second. What have we got? We've come off the bullish, we're into the bearish. Through the technical color changes that we would expect. This is the full color change, if you like. We go from bright blue to darker blue into darker red, out the other side into bright red. So that's a full change in cycle. So we've gone from this little rally high into this little rally lower and reflected on the trend monitor. Where is that going? Well, it's going back down here. Exactly the same. You've got the level above, level below, volume point of control in the middle. It's that very neat little sandwich which gives you that information as to where that particular reversal is likely to pause. You know, it's not going to go much further than this because it's almost certainly going to congest at that level. Such powerful indicators, can't tell you. Right, that we've run over time. Apologies for that. Let's just wrap up very quickly, show you where all the bits and pieces are. This is Anna's site. This is where you'll find all the blog posts over at annacooling.com. Probably more going up today. The videos from this session will also be up there today as well. This is where you'll find the complete Forex trading program over at quantumtradingeducation.com. We call it that because that, put simply, is what it is. You've got 5 core modules down here. We talk about the psychology module, which has, I think, 8 PDFs associated with it. You've got the fundamental analysis module, which is huge. It takes you through all the various aspects of fundamental analysis. It explains what is likely to happen if a particular news release comes in stronger or weaker, how it's likely to impact the currency. It's all both global picture and also local picture as well. Then you've got the relational analysis module, which talks about how markets are interrelated. Why is it that sentiment is reflected across all markets, all 4 capital markets, whether it's bonds, whether it's commodities, whether it's stocks, whether it's Forex, they are all interrelated. Forex world sits at the center for the simple reason it is cash. It is conversion of cash from one market to another. So if you're rolling out of stocks and you're moving into a safe haven, you've got to convert to cash, and you do that through the Forex market. That's why the Forex market is the kingpin of trading. The technical analysis module is a deep dive into the VPA methodology and incorporates all the aspects of Wyckoff. It is an incredibly comprehensive module and really takes you to another level in terms of your VPA analysis. Then there's the mechanics of trading. It explains tactics. It explains how to understand currency flows, timing, your trading plan, how to put it all together. And then down at the bottom here, you've got this huge array. There's something like 250 hours of video in here. There's over 450 lessons, I think, in there in total. It's a massive, massive program. But when you come out the other side of it, and of course it incorporates all the trading indicators as well, when you come out the other side of it, you will have a deep and broad understanding of how and why the Forex market works in the way it does. And it will give you the confidence to trade this market, which is what most Forex traders lack. It is confidence because they don't understand it. And of course, in addition to that, we've got the VPA chat room, which is hosted by Anna and myself. And we're there pretty much every day to answer your questions. Finally, in terms of the indicators, you'll find them all here, quantumtrading.com, MT45, NinjaTrader 7.8, and TradingView. TradeStation, yes, it's coming. It's been an awful long time. Apologies, I know. But we are almost there, so please don't worry. 2 versions of that, TradeStation 9.5, which is the relationship with interactive brokers, where that is your live data feed. So it's a combination where you'll have the advantages of trading a deep discount brokerage, but also trading through the TradeStation platform. And then there's TradeStation 10, TradeStation Securities. Both have radar screen, which is immensely powerful, fantastic charting program, charting platforms, wonderful. Very excited to get that launched, hopefully very, very soon. As soon as we've done that, we're going to drop back onto TradingView. We're going to pull over all the other indicators that are not available or we couldn't program them because we were lacking some key tools in the Pine script, which we now have. So they will be added. So if you have the TradingView, if you've invested in the TradingView full package at $600 and whatever dollars, good news is you'll get all those indicators free of charge as a free upgrade, because as soon as that's done, then the price of that will be aligned to the MT45 package. So that's it. Thank you very much for coming along today. Hope you've enjoyed it, and we will be back at the same time next week, 7:45 UK time. Or we will see you later this afternoon at 3 o'clock for the US session, which of course will be an hour later than it normally is in terms of the markets opening, because the markets will be open at 1:30. So we'll be well into the session by the time we do the webinar. There we go. We will see you later. Enjoy the rest of the trading day. We will see you next week if you're not coming along later on. If so, we will see you there. So thanks for coming today. Hope you've enjoyed it. Hope you found something useful that you didn't know before. And bye for now.